Okay, so today we are going to talk about the real estate professional designation. This is something that you claim on your taxes that essentially will help you get around the passive activity loss limitations that we talked about in a prior video. So as a reminder, if you have a rental property, you have a loss on it in a year and your adjusted gross income is over like 125,000, you're limited at the amount that you can actually deduct in those losses to the amount of your passive activity income. In other words, if you have one property and you have a loss in that year and your income's over that threshold, you can't deduct any of it. It gets suspended into the future until you either sell that property or until you have passive activity income that you can use to offset it. So the real estate professional designation is basically telling the IRS, I spend so much time on real estate that it really can't be considered a passive activity like everybody else, and in order to take this designation, you have to qualify. You basically have to take or pass two tests. The first one is that more than half of the personal services that you spend on all activities throughout the year needs to be on real estate trades or businesses. In other words, if you have like a W-2 job, if you're like a salesman or something like that, and then you have a couple of rental properties, you're probably not going to qualify for this because you need to spend at least half of your time, including like W-2 jobs, on real estate activities. If you don't qualify on that, don't bother claiming it. But if you're the type of person who maybe you have, sole proprietorship that you operate and then you spend a ton of time on your real estate and that's kind of your main source of income, then you may be able to qualify. That's test number one. Test number two is that you must spend at least 750 hours during the year on real property trades or businesses. So again, in order to claim this designation, you have to be super, super careful with tracking your hours. If you don't do that, you will certainly lose an IRS audit if they decide to audit you. And speaking of which, if you claim this designation, it's one of the most commonly abused designations out there, or anything that you can put on your taxes. And the IRS is aware of that. So we don't know what the IRS red flags are, but if I were an IRS agent, this would be one of them. If I see someone claiming the designation and they got a bunch of other income and wages and all that other stuff, I can probably assume that maybe they don't qualify and it's worth taking a second look at. So again, the only way to really take this designation is to be super involved in real estate and to be super, super careful with tracking your hours. And when we say tracking your hours, I mean literally a daily log of what you were doing, what activity it related to, and how many hours you spent on it. And then same thing for your other jobs or other sources of income. If you don't do that, like I said, you're almost certain to lose a challenge if you are challenged by the IRS. Audits are super uncommon, but again, it's something it's worth being careful about, especially if you legitimately qualify, because this designation can save you a ton of money in income taxes by being able to claim your losses. The other thing that most people don't realize is it can potentially get you out of net investment income tax, which is a 3.8% tax that some taxpayers have to pay if you have higher income levels. It will get you out of that basically because you're essentially saying these aren't passive activities. So anyway, that's pretty much the gist of it. If you are wondering if you qualify or not, or have more questions about this, let us know.